In this lecture, we are going to outline the 6 dimensions of a professional trading strategy and the difference between an amateur strategy and a professionally designed strategy. This is a necessary starting point that most retail traders get incorrectly, and therefore, they start their trading journey with the incorrect mindset about the market and how they are going to approach it. First, let's define the difference between an amateur strategy and a professional trading strategy. Roughly speaking, an amateur strategy is composed of a few tricks to get in and out of the market, and it doesn't have any sort of underlying principles that hold the strategy together in the long term. A strategy with this structure is certainly problematic, but it's not obvious why in a first moment. Since amateur traders usually lack the necessary depth of analysis about their trading ethics, they will relentlessly employ strategies with this faulty structure, and as a consequence, they will get frustrated with the results eventually. On the other hand, a professional strategy is composed of multiple minor strategies and it covers many different angles of analysis. In other words, a professional trading strategy has multiple strategies that are fully connected with one another and balance each other out. It also aims to provide a problem-solving framework instead of shallow rules to deal with inevitable problems that arise in trading. With that said, we obviously want to employ a professional trading strategy to achieve the best long-term results in our trading. This idea leads us to the recognition of the 6 dimensions of a professional trading strategy. The first dimension are the trading principles. These are the foundational aspects of a strategy that will guide the rest of the other 5 dimensions in the correct way. We will explore each trading principle individually in future lectures. For now, it is important to know the role these principles play in the 6 dimensions of a professional strategy. The next 3 dimensions are part of what is called the tripod of success. This metaphor serves the purpose of pointing out the fact that these 3 dimensions have a greater degree of connectivity between one another, and the whole strategy falls apart if any of them is neglected in some way. Just like a tripod falls to the ground if any of its legs is removed, a professional strategy falls apart if any of the dimensions of the tripod of success are corrupted in some way. These 3 dimensions are high-quality technical analysis, solid risk management, and deep trading psychology, which can also be called behavioral economics. It is interesting to notice the link between these 3 dimensions. For example, the intersection between technical analysis and risk management is what gives rise to the principle of good trade location, which is a foundational aspect of trading. In other words, it is impossible to trade using just technical analysis because the risk-taking approach becomes distorted and unrealistic. On the other hand, using risk management without technical analysis leads traders nowhere because we need to trade near the reversal points of the market, and the only tool we have for that is technical analysis. The intersection between technical analysis and trading psychology is also very important. Since high-quality technical analysis enables the trader to deal near the reversal points of the market, technical analysis plays an important role in diminishing the psychological pressure of having to risk more than what is necessary. The intersection between risk management and trading psychology is also deeply important and pragmatic. The correct application of the risk management mathematical guidelines enables the trader to operate within a relatively comfortable margin of error. This relatively comfortable state has the great quality of being sustainable for an infinite amount of time. That's the fundamental fabric of sustainable and consistent trading. The 5th dimension of a professional trading strategy is called operational logic, which is composed of certain tools that help improve the trade quality and manage particular trading situations with greater ease. The 6th and final dimension of a professional trading strategy is the trade plan, which is a compilation of rules and axioms designed to keep the trader on the right track. This last dimension has a profound importance due to the way the human brain is wired, as we are going to see in future lectures. These are the 6 dimensions of a professional trading strategy. Now we are ready to explore the first dimension in greater detail. In the next lectures, we are going to dissect each of the trading principles to truly understand their role inside a trading strategy.